Want to use your credit to invest in real estate? In this episode, Benjamin Stef with Funding Freedom actually reached out to me to share everything you need to know to kick off your journey today.
You would always want to be on the side of having good credit.
You think it pays to have good credit?
Benjamin, look, man, I want to definitely appreciate you for hopping on this episode, man, and reaching out to me and getting on the It Pays to Have Good Credit podcast. And man, it seems like every time someone submit a request to join the show, it's like I'm always looking for that specific person. Over the last two episodes, I've had both a realtor that's local here in the Phoenix area and a mortgage loan officer. He was actually the president of a mortgage company. And I was just sitting down and thinking, I need to do more educational episodes on home buying, more educational episodes on real estate and things like that. And then right after I did those episodes, man, you reached out and I'm like, okay, I definitely need to make some content on, people that's looking to use their credit to jump into the real estate market, not just for personal homes, but, as far as investment purposes and things like that. So, I'm going to give the floor to you, man, let you introduce yourself to our audience, who you are, who do you help, what areas do you serve, and we're going to go from there, man.
Yeah, so my name's Ben, and born and raised in Chicago. I come from an immigrant family. My dad's a GC, so we did general construction growing up, and so we came from a hardworking family. We were taught to work hard and not always work smart. So I was like, what if we do both? And that kind of led me into what I do now with loans
Right.
and mortgages. How I started, accidentally fell into the industry that I'm in now, applying for online corporate jobs, went from more corporate to less corporate and eventually started my own thing. So yeah. And then now we're here.
There you go. There you go. Well, I have some questions on my own, man, and I'm sure a lot of our clients and a lot of our audience are wondering the same thing. When it comes to, I guess, using your credit to jump into more of the real estate investing, how does this play out with your personal credit? Is there certain scores that you need? Because I know when it comes to personal homes, most of your mortgage lenders, depending on the loan type, they can work with you as low as 580. Some may say 620, 650. So how does those requirements look when it comes to investing into real estate?
So we've done even as low as 500, right? So it's possible for credit, at least for personal homes. Yeah, it was crazy. We closed one at 541. Yeah, like in the last few months.
Yeah.
So it's definitely it's a possibility. But I would say when it comes to investing in real estate, the credit score requirements are actually more strict. When you're buying a personal home, we can be a little bit flexible on credit. There's some creative programs that we have that you can kind of get approved for depending on what's going on with credit. But obviously credit is the pillar of everything. Like I tell everybody, when you're getting approved for a loan, whether it be investment or for your own home, you have credit, income, and assets. So those are the three pillars of lending that every lender is going to look for. Now, for investing, they don't look at personal income as much. When you're buying real estate property, there's programs where you can, without W-2 income, no tax returns, you could buy a rental property. And so it's great that you can buy a rental property with no income verification, but they're going to, they say 620 or 640 credit score, but that just means that they're going to increase the amount that you're going to need to put down. So if you have a lower credit score when investing in real estate, they're going to want you to put 30%, 40% down. That's typically how, right? If you have a great credit score, then yeah, you can, buy rental property 20% down. So that's how they typically do it. But yeah, for I would say for investing in real estate, what you actually should have is a 680 or 700 credit score, Chris. Before you play offense, you got to play defense, is what I tell people. And your defense is credit, having cash on hand, and having money, right? When everybody wants to score, right? Everybody wants to be like Steph Curry, but like nobody wants to block and get the rebounds, right?
Yeah.
And so that's what you need to do first before you start throwing money at things and investing in real estate. So credit, nonetheless, like yes, can you go as low as 620 and 640 for buying real estate? You can, but should you? At least for investing, no. Like I would try to fix that. But for a primary, yes, like it could work. So yeah. Hope
Yep.
that makes sense.
Oh, for sure, man. Do you find that down payment may be the biggest issue that people have when it comes to jumping into investing into their first real estate property? Because I feel like that would be.
I think it is
Yep.
because people are trying to prematurely jump into it when they don't even have enough money saved. So, like a rule of thumb that we have is when you're buying a rental property, you should have 6 months of the mortgage payment of that property. So if you have
Mm,
10 rentals, having 6 months times each of those rentals is really going to help you have a cushion in case there's a tenant gap, right? Or vacancy. That'll help you have the funds to cover those payments. But yeah, I think people are like, okay, I got 10K and or 20K and I'm ready to invest in real estate. And I'm like, well, unless you're house hacking or, buying a 4 unit living in it, like I would say you're not quite there yet. You got to have some money on hand. Again,
yeah.
that's the defense part. You got to have that established first. Yeah.
Right. Are there any hacks that, I wouldn't think about when it comes to down payment for people that, aren't fully ready to have enough cash saved up? Is there really tricks or hacks that you would even advise for that? For the people that's having
I mean,
trouble saving up for that?
I would say, they have these rules in place. Like if people are struggling to save money, then that goes to show a
Not
broader
ready.
picture that maybe need to work. Like there's bigger
Yep.
issues at hand. Like maybe you're spending too much, you're not making enough. I don't know what the issue is, right? And so like I know a lot of people that have bad spending habits and saving habits and they want to invest in real estate. And I'm like, you got to fix that first. Like you got to
Hmm.
fix your house before you go out to the world and tell other people how to fix their houses, right?
Yeah,
And how to fix
exactly.
their problems. And so, however, there are some strategies or hacks that you could use. My Our favorite one right now is if you're buying a 3 or 4 unit property, you can go as low as 3.5 or 5% down, live in one unit, rent out the other units. Do that
Mm.
every single year, and buy another one, then buy another one, because you can get in for 20K, 30K, 40K, right? And have that available to you. We even have a 2 unit down payment assistance program. If you want to buy a duplex, we have
Oh,
a
wow.
FHA assistance. Yeah, it's pretty neat for those that are trying to do that. But I would say for that's one idea. The second one, you could raise money, right? If you want to partner with people, if you got other people that, hey, let's chip in, let's buy a building together. You got some friends, I'll chip in 5K, you chip in 5K, this guy chips in 5K. We'll all go on the loan together, and that might help too. Now, of course, raising money is hard if people too, if you don't have a good reputation and you're not good at saving money, Chris, right? Like, why
All
would
right.
people give you money or partner
Yep.
up with you if you don't have a good reputation? So I think it matters too. Like, you gotta have the reputation where like, hey, this person's smart, this person's going places, they're not spending money at the casino, things like
Yeah,
that.
absolutely. Well, I think the biggest fear being a lot of people have is investing in real estate right now. And this is my opinion, but also from what I hear a lot from clients that are trying to buy personal homes. Believe it or not, man, I've had clients with 500, 550 credit scores, and we helped improve their credit scores, and they got into like 680, 720. And I've had people call back and say, hey, Chris, we've improved our credit. Thanks for all the help over the last few months. We're going to hold off on buying a home, man. These rates are too high. And I'm like, what did we just go through? Like, why did we go through this? So I can kind of
Yep.
relate that to investing. Do you think there are a lot of people are scared to jump into real estate investing right now just because of the 6, 7, whatever percent interest rates on real estate? What is your opinion on that?
Yeah, I have a pretty my opinion on this is pretty harsh. So first, so to answer your question, no. Like real estate investors that I work with at a high level, and we're talking people that like have money, that have
Yep.
own 100 doors. I got a guy
Oh,
right now that owns
dang.
120. Like these guys
Cool.
are big. Let me tell you something. They almost don't care what rates are doing or what the market is doing. They're finding the deals, and if the deal makes sense, they're buying them.
There
That's
you
what
go.
matters. That's all
Yep.
they care about. It don't matter if it's 3%. It don't matter if it's 10%. Let me tell you something. If the rates do go down again to COVID rates, 2, 3%, you might say, oh, okay, now we're ready to buy, right? Well, what happens in the summertime with airfare prices? Or what happens when, let's say, there's 10 houses available in the market, but then 100 buyers flood in, right?
Yeah.
Because rates have gone down. What does that do to home prices?
It goes up.
Why?
Yep.
Right? there's multiple people bidding on the same house.
There you
So
go.
that drives up the price, right? Same thing for airfare, right? We see this a lot in high demand, Disney
Yep.
World tickets, you name it. So
Yep.
when it comes to rates going down, the disadvantage is now you got to compete with 50 other people and buy. And now I got guys that have buyer's remorse because they're coming back and they're like, oh, we bought a property in COVID that just now the value is caught up to what they paid for it,
Yeah.
right?
Right.
Because it wasn't really worth what they paid for it during COVID. And so that's the problem too. And when people say mortgage rates are too high, the 50-year average for mortgage rates is like 7.52.
Yep.
Okay, last 50 years. And right now we're hovering in the sixes, right?
Yeah.
When people say the mortgage rates are too high, I'm like, compared to what?
There you go.
They say, well, COVID. I'm like, okay, so you're comparing high to an anomaly that will never happen again. If you're comparing baseline 2-3%, then yeah, everything forever is going to be too high. So
Right.
that's my first point.
Yep.
My second point, cost of eggs has gone up, lumber has gone up, right? Inflation. I understand a lot of energy. Everything has gone up since COVID. With that, mortgage rates have also gone up. But unlike groceries and lumber, mortgage rates are actually not high. Like that's my
Mm.
controversial opinion. Eggs are high because eggs have never been this high.
Yep.
Mortgage rates are actually not high because they've been higher. They're
Right.
actually cheaper than what they've been.
Yeah.
So
Yeah.
that's just something to think about. And when I hear that too, that's just an excuse. Like either
Yeah.
you want the house or you don't. You
There
want
you
to
go.
invest in real estate or you don't. When people say mortgage rates are too high, I'm like John, Steve, Mary, Susie,
Yep.
whoever I'm talking to, right? I'm like, have you actually looked at the payment though? And that most of the time, no. I'm like,
You're
have
right.
you checked out what your payment is at a 7% versus a 3% rate or a 5% rate or a 10% rate? Like, have you actually looked at the numbers? Odds are they haven't. They're just using that because everybody's saying it, right? And it's just a
Right.
smoke screen. Objection is what I call it. So yeah.
Yeah, yeah. I'm actually on Facebook a lot, and I have a lot of friends who are real estate investors. And some of these guys, they hold, I guess, these real estate webinars or whatever every month or whatever. And I seen something that kind of caught my attention the other day. Someone posted, or they made a post, and they were like, "Hey, we can help you get private funding. You don't have to go through the traditional FHA or conventional or whatever crap to get a home approval. You can get private funding today and you don't have to go through all of those loopholes and rules and all of that stuff." And I'm like, okay, some of this sounds misleading, but am I missing anything? So, are
Mm.
you familiar with all these different funding strategies that people can use to invest into real estate today?
Yeah, so sometimes there are a private group, like I have access to this money, right?
Oh, wow.
And we have, well, but let me clarify something. So there is like private money where it's not as institutional, meaning you're not going to an actual big entity. It's a small entity, let's say led by a few guys that have, let's say, $1 million or
Right.
500K in the bank, right? And they're willing to give it out to people to buy property. And so I don't know what the stipulations and guidelines are. Whenever I hear something that's too good to be true, normally it is. So I'd want to
Hmm.
learn, like, yes, does that exist? Most of the time, it's for investment. It's not often for primary homes,
Yep.
because at a small scale, it's not really profitable for us to lend, $400,000 for you to buy a house, and my
Yeah.
return is what, 6.5%, 7%. I actually can make more money taking that money somewhere else.
Yeah.
So the only time it makes sense is if like it's like hard money, like, hey, I'll give you 50K, 100K right now to go do this flip, but then you got to pay me back at 10% interest, 12%, 13% interest. So sometimes the interest rates for that, like I've heard of guys like what you're talking about, and they charge like a 25% interest rate, like same as credit cards
Dang.
almost.
Cool.
For like, hey, we'll give you a loan. Like I had a guy that just got out of prison, and he got approved by this group in California that was like, yeah, we'll give you a loan, but your rate's like 25%. And I'm like, why not just
Golly.
fix your situation? Like, why not just get back on your feet first and just do it the normal way? Like, I understand the like going against the FHA conventional traditional. Like, I get that. Like, I'm
Yeah.
I'm I'm a creative guy. Like, even though that's what I do, that's how I get paid. I'm all for creative stuff, but like, it's not always the best for your situation. Everything is about vehicles. Or I don't know if you talk to people about this. Like, it's like someone asked me, should I buy F-150 or a Toyota Prius?
Right.
My initial response is always like, well, I don't know. It depends. Where are you trying to go? Are
Right.
you a contractor? Buy the truck. If you're an Uber driver, buy the Prius. Like,
There you
it always depends on
go.
where you're going, because then that tells you what's the best vehicle to get into drive. You know what I
Right.
mean? So
Right.
yeah.
Yeah, absolutely. Are most of these people using their personal credit for real estate, investing at least?
Yes and no. For investing, like they'll use it for construction. A lot of people use personal business lines of credit for construction,
Hmm.
and it's harder to use debt for personal properties. Like if you're buying a home and you're borrowing money for the down payment, they're going to catch that.
So Ben, let's hop back into the house hacking strategies. You touched on it a little bit, man, where you live in one unit and you buy like a, duplex or a fourplex. You live in one unit and you rent the other units out. And that's completely legal. I've heard that before. But is there a limit to how many times you can do that?
Yeah, there is. So I talk about this in my YouTube channel on funding freedom. We have a lot of videos for multi-unit for house hacking because it's very effective to have, multiple tenants under one roof as opposed to having four single family homes. I'd rather
Yep.
have four tenants under one roof. Like it's
Mm,
significantly easier. And so house hacking is the greatest way to, in my opinion, I don't think you should buy the house. I mean, if you have kids, you want to go to a good, nice school, that's different, right? But if you don't have kids, or if you and your spouse, or if you're single, like house hacking is the best way to kill two birds with one stone, right?
there you
Buy a
go.
property to live in, but then also have some income coming in, so where you're at least living for free. Housing is the expense that will be with you till the day you die, just like taxes and
Hmm.
healthcare, right? So if you can eliminate housing, significantly that'll change your life, right? However, the stipulation is that there's only a certain amount of times you could do this, where if you buy a building, you can wait 1 year, buy the next, wait another year, and then maybe buy the third one. But then at that point, underwriters basically it comes out to underwriter discretion, Chris. What
Right.
that means is like the underwriters have to say or approve based on why you're moving. They're going to ask you, hey, you just bought a property. Like, what's the reason for moving? So you'll have to
Yeah.
say, closer to work. My neighborhood's not safe. You'll have to have good reasons, better school. I don't know. Right. So that's kind of gray area that we have to play in. But normally
Yep.
you can do two or three before at that point,
Mm,
then it's like, okay, you can't do anymore. You're probably going to
right.
have to buy,
There you go.
investment. So
Yep.
yeah.
Man, you know what I thought about, and this goes back seven, whatever years ago when I started my credit repair business. I used to work in car sales, as everyone know, and I got into the credit repair space because it got to the point, man, where my sales just dropped to the floor. It's not because of my work ethic or anything like that. It just got to the point where I'm going to work 12 hours a day, bell to bell, and I'm doing everything I'm supposed to do, but these people would not get approved in the finance office. So that's when the whole idea of credit repair came around. So long story short, my business got very successful. I was able to quit work within probably 6 weeks, 8 weeks at the most. And, I
Wow.
went from zero clients to 100 clients within that period. And I was able to luckily quit work at that time and scaled ever since. But what I'm getting at, my wife, she's seen what I did and she was also motivated to work for herself. And, at this time, I'm doing good. I'm living well. And I'm like, sure, if you want to jump into this world of working for yourself, sure, it's not easy. But she started a local charcuterie business, which I didn't even know what the heck this was at first. But apparently, all of these girls are doing it on TikTok and Instagram. And dude, she has blown up. Every weekend, she's setting up this big long table in the Phoenix area of all these cheeses and fruits and meats and all of
Mhm.
this stuff. But what I'm getting at, a lot of people take so long deciding what they want to do for themselves when it comes to working for themselves. So a lot of people spend months. What should I do? Should I do this? Do I like doing this? But I think I was watching one of these real estate guys. I think it was Grant Cardone, and he was like, real estate is the easiest thing that you can invest in. There's no thinking what you need to do or what ideas you should have. Real estate is there 24/7. You just jump into it. And I'm like, wow, the people that's sitting at home wondering what business could they start or what could they do to make extra money, you know, it should be real estate because the whole house hacking thing you just gave, if you purchase a home or fourplex or whatever and live in one unit, of course, these places are going to cost a lot of money, but that is something that should be a no-brainer because that is a instant footstep into that door of investing into something that is eventually
Yep.
long term. Nothing's going to happen overnight, but long term, it's going to earn you more money and more money and more money. So, I
Yeah.
definitely see the benefits of, using credit, purchase real estate, invest in yourself, because that's a no-brainer, man. And honestly, if I can go back with the very first home I bought, maybe 7 years ago before my wife and I was married, man, I would have went back and did that as, a single guy and did that for myself, single guy,
Yep.
no kids. Like, dude, that was a no-brainer, but
Yep.
I've always heard of house hacking, but I was always skeptical on one of those things that sounds too good to be true, right? Just like credit repair. People hear that you can work on people's credit and get collections, late payments removed. It sounds too good to be true, but hey, there's actually ways to do it. So, I'm glad you kind of touched on that briefly.
Yeah, and I think like we need guys like you. Like the fact
Oh,
that
yeah.
there's companies and there's a lot of bad ones out there, right, that
Yep.
take advantage of
Oh, for
people. But
sure.
I think like doing it the right way with integrity, actually helping people get from point A to point B. Because
Yep.
credit, when you improve that credit score, credit is a lot like fat, right?
Yep.
It's easy to gain weight, but it's hard to lose it, right? Easy to get
Yeah.
fat, hard to. And I think credit, it's easy to tank your credit score, but then hard to build it back up. And so once you've learned your lesson, because most people are like, yeah, I shouldn't have done that, shouldn't have opened that credit card or done that thing, whatever, bought that thing, and they get back on track, it opens up the world for them to get financing. And that's what you need, because then you can use other people's money, like
Hmm.
me, the lender, right? The bank,
Yep.
use their money to go buy real estate that pays you, and you get all the benefits. Now, the thing is about real estate, it's like it's get rich slow. It's not get rich quick, right?
Hmm.
There's no like secret, oh, okay, do this and you'll become a millionaire in a year, right? And I
Yeah.
think a lot of these things just take time and it takes work. Like, do you want to live next to tenants? Do you know how to manage tenants? Do you know what it's like to collect rent? Are you prepared if they don't pay rent, right? There's a
Hmm.
lot of things that people like it's work. Like
Right.
what in life, like marriage, like business, what in life is easy, right? That's
Yeah.
super rewarding, but really easy. Like
Right.
not much. Anything that's hard in life or anything that's worth doing is going to take a lot of effort and take a lot of work. And so I think real estate's the same way. Like, yes, house hacking is great. I think it's one of the best strategies, but you have to be willing to be responsible. Your tenants are your customers. You're basically starting a business. You're buying a
Yeah.
business
There you
when you
go.
buy a multifamily property, right? Your tenants are your customers. Are you going to take care of your customers? Again, back to the offense and defense thing. If you can't even take
Yeah.
care of yourself or your own family, how are you supposed to take care of your tenants? How are you
Yeah.
supposed to look after your
Impossible.
tenants? Impossible, right? So I think that's really important too to distinguish. Yeah.
Yeah. Well, man, in my previous episode, the president of this mortgage company, he said it best because he actually defended the whole entire credit repair industry, because you have a lot of these knuckleheads that's out there thinking that they can go from a 450 to a 750 in 30 days and delete everything off of their credit that they've taken years to put on there. But he said it best. He called it that, or he stated that we live in a Ozempic society. And
Yeah.
I have been using that word for the past few weeks to everyone that I talk to, because I'm like, bruh, I'm using that for every little thing. And look, I've told clients this. I'm like, look, there's no Ozempic shot that's going to boost your credit score just because you
None.
signed up on a website, to fix your credit. Even though somebody called me right now, hey, Chris, I got all of this stuff on my credit. My lease is over next month. What we're looking like, I don't know. So, I laugh every time I hear that, man. A few more things. So let's take your typical clientele that you love to work with, and these guys, they have the money saved up, they got all of these things. Do you get involved as far as advising them what's right or what's not the best option? And what I mean by that, let's say if you get this one guy, he has the perfect down payment, got tons of reserves saved up in his bank account, he has an 850 credit score, he's your ideal clientele. And he's like, Ben, I'm deciding, I'm definitely going to use you, man, to get approved and things like that. But I'm deciding, man, if I'm just going to build my own fourplex or buy one that's for sale that I already have people living in them, living in them, and this investor is trying to get from under or get out of it. Is there really a right or wrong thing that that person is looking at there?
No, so it goes back to the Ford F-150 versus the Toyota Prius,
Yep.
right? Conversation. It depends on their investing strategy and where they're trying to go. So that tells me like you, Chris, as an investor, or you, Chris, as a home buyer, depending on where you think you want to go and where you're trying to go, and then that'll tell me, okay, this is the best bridge from point A to point B. Now, sometimes I might like tell people, I'll still tell people my opinion if I think, hey, I think this is a bad idea. Like you're trying to do this, but I don't think you're ready, or I don't think this makes much sense. I like, for example, the multifamily conversation in my market in Chicago. Yeah, there's a lot of multifamily. Like behind New York, I think Chicago is the number one multifamily market, small residential, and then New York's I think number two for
Yep.
like 2 to 4 units. And so we have a lot. There's a lot of multifamily properties in our market. However, we don't have a lot of land. Unlike
Mm.
Florida, Texas, even parts of Arizona, like you could buy
Yep.
land and
Oh
develop on
yeah.
it. I love personally, I think that's a terrific strategy to build a 3 or 4 unit property from the ground up. It does take a lot of work though. I mean,
Yeah.
you're building a building. Like we're
Yeah.
not talking about building a IKEA table, right?
Right.
So ground up construction, my favorite strategy is, hey, buy land, get money to buy a 4 unit. I'm sorry, to build a 4 unit and then rent it out, right? I think that's
Mm.
extremely effective. Not everybody can do that. Takes time, takes patience, takes the network. You need a great developer. You need to have them sometimes co-sign on the deal. Sometimes they don't want to because you don't have experience. You're an average Joe, right?
Right.
So that works if you're really not liking the market that you're in with all the existing built properties. You know what I mean? If you're like,
Hmm.
hey, all these 3 4 unit properties are overpriced, none of them make any sense financially, then yeah, go build your own,
Yeah.
if you want to,
Absolutely.
if
Yeah.
you're willing to climb that mountain. Yeah.
I have one quick scenario for you before I go into the next topic here.
Yeah.
Let's say if I use my credit to purchase an empty fourplex, right? And over the next 6 months, all four buildings are eventually rented out by people who are renting from me. Um, if I decide to refinance, within 6 months and is, full capacity, I guess the value of that fourplex would eventually be worth more in the bank's eyes. So can I cash out of that situation? Would that be how that will work?
I mean, if unless you've done what's called forced appreciation, meaning you added value to the property to give the banks a reason to assess it at a higher value, traditionally no. You
Okay.
can't, like, unless you've done that, you can't like just take cash out. I mean, like if it jumped in value, in theory, yeah, you can get a line of credit or you can take cash on the property because you have enough equity. But
Hmm.
typically in 6 months, you're not going to see an equity gain of that much, enough
Okay.
to take money out, especially
Yeah.
if you put the minimum down payment. Definitely not.
Yeah.
Yeah.
Yeah. It's just one of
If
those
you put
things.
30, 40% down, maybe. But yeah.
Yeah, yeah, for sure. It's definitely one of those things I've came across just scrolling on TikTok and YouTube. And, it's these little 30-second clips of people saying, oh, invest in real estate now. When you have all of these people renting from you, go to the bank and show them that you're full capacity and then your
Oh,
property is going to be worth 6 figures more. You can take the money out against the property because it's worth 10 times more now. And now you can go use that money to jump into the next property. So,
that
again,
hurts
it's
me.
one of those things that's too good to be true, right?
It's so dumb. Like I hear that, so where that's coming from is investors when they assess the value of a property, there is an income approach.
Mm,
However, banks do what's called a sales comparison approach. They go at it of the list of what's the sales data in the last 6 to 12 months in that area of all the properties that have sold, or at least if they haven't sold, then they expand the radius or they look at listings of the same property type that you have now. It's irrelevant of the tenants and the rental income. That doesn't matter. Now, taking off my loan officer hat, putting on my investor hat, yes, we're looking at cap rates, right? We're looking at, okay, how much money gross are we bringing in? What's our NOI, net operating income? Like, yeah, we look at that stuff. But like putting on the loan officer hat, like we don't that doesn't it's almost irrelevant, right?
right.
Like it matters for the loan to some extent for the rental loans. Yes, like it does matter. You have to have enough rental coming in, but that doesn't increase your value. I think it's just people just don't know. Like, I don't know. It's kind of like if Tom Brady gave me NFL advice, I would take Tom Brady's advice.
Oh
Like
yeah.
I would listen to him. LeBron James, Jordan, like if they're giving me advice on how to be at a high level, a professional player in the NBA, like fine. But like guys like this, people are like giving
Yeah.
mortgage advice right? But they don't
Yep.
know actually what goes behind. Like I know what it's like to write and like set up an application and get a mortgage like funded and
Yep.
give you money, right? Like I
Hmm.
we're on the back end and we see it. We know the guidelines. We see the proprietary paperwork. And so it makes me laugh that like people are making content like that. I think it's just so great, you know?
Right. Do you think money is more important than credit in today's world?
Yeah.
That's a hard one for me too. Well, let's break it down like this. Clearly, money is more important, right? If I was on Elon Musk or Jeff Bezos level, I would not care about a credit score. Now, when I talk about money
Right.
being more important than credit, I'm talking about people that have 50% down on a property and they, clearly they can't buy the entire property, but they have a crap ton of money. They can put, 500,000 down on a $1 million home, right? Or $1 million investment property. They can put 50% down, but their credit is trash. They have a 530, 520 credit score. So this guy come to you, Ben. Hey, Ben, screw credit. I never cared about credit, but look, man, my bank account is loaded. Loaded. Let's get this deal done. How does that even work out?
You know what's funny? Like you could be putting like 50% down, but yeah, if your credit score is bad, you're gonna struggle to get approved,
Yeah, yeah, that's what I
which
figured,
is kind of it's funny. So that's why like we have as mortgage people, like we can look on the back end and we can do like a what if analysis and see like, okay, if Chris put 15,000 here, 10,000 here, 5,000 here, it would
Yep.
increase their credit score by this much. So
Hmm.
normally in those situations, we'll just tell them, hey, take the assets you have, take the money, put it into your credit, quickly get your score up. They can because they actually have the money. So their score can go up in 35
Oh
days,
yeah,
like
yeah,
a huge amount, because they have the
yeah.
money to pay off and dispute whatever they need to do. And so usually I've had that happen where guys come to me and they're like, they've never cared about credit because they have so much money. But,
Yep.
in these situations, they didn't want to pay the full 100% of the purchase price. And so,
Hmm.
yeah, we'll just quickly raise their credit so that way they can get to a point where they do qualify to give them the loan. I know it's kind of
Yep.
weird, but that's how these systems are at scale. They have to be very black and white because
Hmm.
they're lending to millions and millions of people. So they
Right.
can't like not like back in the day in 1915 where you walk into my office and I'm like, hey, like we grew up together, we played baseball together, right? Sandlot, like give me a loan for a house. And I'm like, yeah, sure, Billy, here you go. Like it doesn't
Yeah.
happen anymore. It just doesn't.
Yeah, I've always wondered what that whole 50% down, 60% down type of guys that just got all of this money. I always wonder in the bank eyes, regardless if their credit score is, just absolute trash, do the banks ever go, oh man, this is a no-brainer. This is a deal. If this guy foreclosed, then, we're getting this property for pennies on the dollar. So I always wondered, about the whole money versus bad credit type
Yeah.
of thing. So yeah.
No, credit matters there. I know it's crazy. You could be
Yep.
putting down so much money, it doesn't matter. Like if they're giving you a loan, it has to fit inside their box, credit wise. So you have to like have enough of a credit score. Yeah.
Absolutely. Yeah. Yeah. And I know with credit card utilization, that was, one of the things you were quickly touching on, things you can pay down to quickly raise your score. Because, dude, with all the clients that I see that sign up for a credit repair service, that is absolutely the number one thing that I see
Mm,
affecting people's credit. I had someone sign up right before this episode here. Their credit card utilization was 116% utilization,
wow.
which means
Wow.
over the limit.
Yeah.
And
Yeah.
I mean,
Right.
dude, that's probably killing their score by at least 120, 130, maybe 150 points. I see it with, a lot of my clients who own businesses that use their, credit cards for business inventory and things like that. One month their scores are like 670, 680. The next month their scores are 520. And I'm like, whoa, what just hit their credit? And I'm like, I don't see anything. And then I look at their credit card usage and it went from 3% to like 89% or something like
Yeah.
that. So,
Yeah.
but that's definitely one of the things that you can do to quickly improve your credit scores. Ben, what are some of the things that
Yeah.
you see people get or reasons that you see people get denied applications? Or what are some of the most commonly accounts that people have that's affecting them?
So there's two main loan programs you can use when you're buying, and I'm talking in the like if you're buying a house, right?
Yeah,
Let's go
yeah.
that route. FHA is more lenient on credit, conventional is more strict on credit. So we've had a lot of people come to like recently that have like pretty spotty credit history, not the best. FHA approves them all day. They're fine. Conventional just would not give them a loan, even if we increased their score 100 points. Like it just wouldn't matter. Like they just
Hmm.
wouldn't touch, because their credit history is pretty weak. So the biggest reason for denial, I want to say, is is honestly is just late payments and high utilization. That's it,
Mm.
right?
Yep.
So you're 116% people, right? People at 8, 90% utilization. You want to keep it under 30, 33%. I don't know if I don't know what the exact number is, but somewhere
Yeah,
around
yeah,
there,
30.
right?
Yeah, yep.
So keep it below 30. And then don't miss the payments. When you have a 30, 60, 90-day late payment on
Hmm.
installment loans or on credit cards, right? That is going to hurt the loan significantly and reduce your score. And then if you have a mortgage already, let's say you're selling a house to buy another one,
Yep.
if you miss a mortgage payment, God have mercy. Like
Oh
good
yeah,
luck. Like
that's
that is
scary.
the worst thing. If you're 30 days late, like if you're a few days late, 15 days late, there's a grace period. But if you're over 30 days late and they ding that on your credit, you got a lot of work to do after that to make sure you can get approved again because lenders hate that. If you're like, oh man, you missed a payment, 5 years ago, like that, they don't like that.
Yep.
There's going to be rules on how long you have to wait after you made that
Hmm.
late payment to get approved again. So that's why I
Yep.
would say those are the main things right now. Yeah.
Have you ever had to deal with clients with collection accounts on their credit and they're unpaid? Does it matter if they're paid or not paid?
Honestly, sometimes no, sometimes yes. It depends on the bigger picture
Hmm.
and the collections total. Like sometimes it's okay, even if it's not paid. If it's a lot of collections, like in proportion to your income, like yeah, it's gonna cause a lot of issues.
Yeah.
So it's kind of like I gotta look under the hood and tell you
Yep.
first to see like it's a little bit of a gray area. Yeah.
Yeah, I get so many clients, man. They sign up for the service online after
Mm,
they've already applied for a mortgage. And boy, these people are
mm.
already pissed off. So, but they sign
Yeah.
up and then we call them or whatever the case is, and are like, I just paid all of this money. I paid $3,000 worth of collection accounts and I'm still denied for the mortgage. I paid these. I'm like, okay, slow down. One, a collection account will not automatically get deleted if you pay it. Some debt
Right.
collectors will honor that, and because they get paid if you pay them, they get a percentage or whatever. But anyway, there's no guarantee that that item is going to be removed. In fact, just due to the Fair Credit Reporting Act, those items are actually still supposed to report for 7 years after the last date of activity on any negative account, regardless if it's paid or unpaid. And boy, so many people pay collection accounts and are still pissed off when they notice those items are still on their credit report and they apply for a mortgage and they still get denied. I get loan officers all the time who have affiliate programs with us, and they send us clients that have collection accounts, but they're already paid and they need them to be removed to move forward with closing. So but vice versa. I had clients that are like, hey, there's only one, there's only two, get them paid and we can kind of move forward. So I'm sure that may have affected their DTI and maybe that was the
Yeah.
only thing holding them back. So I was always curious
Yeah.
about that.
And it depends because like like lenders have what's called an automatic underwriting system where it's just
Yep.
this like robot that gives us green light, red light, yellow light. And so
Yep.
it'll tell us, hey, this is good to go, or no, they need some work, or just flat out, no, it's
Yeah.
it's not gonna work at all. And so sometimes the systems like they're not really clear. Like they just don't like it. Like they just
Yeah.
don't like the loan,
Right.
right? Sometimes they'll say, "Hey, these are some of the reasons why," but it's not like it's kind of annoying, but like we don't get like as mortgage lenders, we don't get in our system an exact like, "Hey, Chris got denied because of this, this, and this." Sometimes like we do. Sometimes it's like, "Yeah, hey, they don't make enough money, but they don't have enough money in reserves." That's fine. But other times, if it's a credit issue, it's just like, yeah, you just don't have a good history. Like we
Right.
can't give you a $300,000 loan for a house, you
Yeah.
know?
Yeah.
So,
Yeah,
yeah.
and I think another red flag, man, is people assuming that credit scores is just the key to getting a home. It's a major part. It's the first step to getting approved. And I've had people almost get mad at me. I had a lady who signed up and her scores were like 660 or something like that, but she needed a few things deleted off of her credit. Well, it got to the point where her scores eventually got to like 710, 712 or something like that. and she got pre-qualified, but for some crazy reason, she still got denied. It was mainly due to her income or, with the rates and things. Her DTI was just too close. It just, she couldn't get approved for that particular home. And she called back and was mad at the service that, and she even stated, oh, I paid all this money and, I had you guys repair my credit and I still can't get approved for a home. I'm like, look, I have no control over that, So,
Nope.
how
Yeah,
do
you
you
did your
feel
job.
about, yeah, how do you feel about these people, just thinking that once their credit is to a certain number, they don't care what's on their credit report, but if they see 680 or they see 700, they're not concerned about anything else. Yet their bank accounts are trash. They have three card notes in their name. What's your opinion on these people that just assume they're
Yeah.
automatically approved?
Well, that's why I call it the three pillars of lending: credit,
Yep.
income, and assets, right? So there's
Yep.
three individual things that we look at that all play a role into you getting approved. Credit is just one piece of the story.
There you
So
go.
that's why we got to look at the full story. So people can ask me, "Hey, I've had so many people, hey, I make 250 a year. I should have no problem getting approved, right?" I'm like, I don't know. You could have 5 car payments, right? I've
Yeah.
seen doctors that can't even buy a $200,000 house
Hmm.
because their debt is so high. They borrowed so much, right? So it doesn't matter anymore. I don't care how much money you make. Guys make 500K a year, 100K a year, doesn't matter, right? So that's what it all fits together. It's a big puzzle piece, and we have to see the full story, the full picture to really come to terms with like, hey, this is what you can get. So yeah, credit's not enough. Credit's super important, but it's not. That's just one piece. It's not the whole thing.
Right.
Yeah.
Well, I think I'm gonna wrap it up with this last topic here. This is one that maybe it is my fault for being uneducated about. I feel like I'm the one who's misled on understanding how this works, but a lot of people are advertising all of these business credit hacks, right? You just see all of these videos online. Business credit, business credit, business credit. Get your business credit right. You can get whatever you want. And I've seen one video where this lady was like, I help you scale your business credit and get your business credit high as possible. And you can hide everything in your name, put everything in your business name. So when you apply for a loan, those lenders can't see that stuff. And I'm like, okay, one, you still have to provide personal bank statements, which if you have transactions coming out of your bank, a lender is going to see it regardless. But let's just say they're paying it out of a business account or whatever, just giving them, whatever they want to advertise there. I've been around business credit. I've built it for my own business by getting net 30 accounts and tracking it on the Dun and Bradstreet. But I don't see where, and I mean, I have a business credit card, but I just don't see what else am I putting in my business name to hide personal items. I can't hide
Yeah.
my home on business credit. I can't hide I mean, I guess I can refinance and put it in my business name, maybe, but like, I just don't even think there's such thing as using business credit to hide your personal assets so you can qualify for all of this real estate. I mean, have you even heard of stuff like this?
Yeah, like it's funny because I work with new investors, experienced investors, new home buyers, experienced home buyer. Like I work with all the whole
Yeah.
demographic like spectrum, and I still have yet to see someone effectively using that strategy because it just doesn't work. Like
Yeah.
you show me where I can. Like nobody's doing that. Like people playing games like that. It's like real investors, Chris, are not doing that.
Yeah. Yeah, for
Professionals. We're talking
sure.
about people that are operating at a even at a normal level, not even a high level. Like they're not. You know, we have programs like there are. We had this one lady that defaulted on an SBA loan that didn't report to personal credit, which was true. It didn't, but it came up in underwriting because
Right.
like they do a search against you. Like you have to personally guarantee a lot of these loans. So even if let's say you buy a property in an LLC, which we do all the time, it's totally
Okay.
fine. You can do it. You put it in an entity name. The mortgage itself, even if it reports to the EIN of the business, right? So even if it reports to that business, you're still personally guaranteeing the loan, number one. And number two, even if it doesn't report to personal credit, which sometimes we could set it up that way where it doesn't report to personal credit. But guess what? When the loan gets sold and the mortgage gets sold to another servicing company, you know how like sometimes Chase is taking your payments
Yep.
and it moves to Wells Fargo or Rocket or
Yep.
Mr. Cooper or whatever. When that happens, they will start reporting the mortgage on personal credit sometimes. So either way, no matter
Mm.
what, when it comes to now, remember, I'm speaking in terms of mortgages or
Yep.
loans for real estate. I'm not
Yep.
speaking like the business loan thing.
Yeah.
Like I don't do those, right? So I
Yeah.
don't know like, but for mortgages, like we see business loans come up, like we'll see it in the bank statements. If you suddenly have a $50,000 deposit, we're gonna ask where did it come from. Okay. If you stop making the payments, we're gonna ask why, what happened. You still
Hmm.
got to pay them back. So that lady I told you about, she had to pay back the $7,000 like loan that she defaulted on because
Dang.
we needed that taken care of. In that situation, not always, but in that situation, we she had to pay it off. So anyway, with that being said, either way, like you're going to get attached to a lot of these deals, right? Even
Mm.
commercial, even if
Yeah.
you're buying a $5 million property, right?
Yeah.
You are personally saying, I am going to pay this, right? And manage this. And so there's no like hidden veil that you can just hide behind, like people, yeah,
Yeah.
it'll come up.
Absolutely.
Hey, Chris, so obviously you work with so many different clients that are improving credit and working on their credit scores. Like, what do you see just at a high level as far as patterns go of why so many people have struggled or have lower credit scores? Like, what are the commonalities with that?
Absolutely, man. And look, it's easy to. I'm more of a guy to where I hate people that play victim, right? I hate the whole victimhood mentality mindset of everyone's like, oh, poor me, this happened to me because it is, or I didn't grow up this way, this is all, the outside results hitting me and things like that. At the end of the day, I look at some of the things that Dave Ramsey talk about, right? And we all know who Dave Ramsey is. And Dave Ramsey, look, let's face it, he's against using credit to your advantage. He hates credit. He became almost a billionaire by not using credit. Look, I wish I can be like that one day to where I don't have to use credit. However, I'm poor and I have to use credit to invest into real estate if I ever jumped into that. So, a lot of the things Dave Ramsey talk about, are a different audience than both of ours here. These are people who are using buy now, pay later loans to go on vacation. These are people that's using loans to buy bags and clothes and shoes and using a firm to buy things online, So that is his audience. And what he talks about is actually true. These people put themselves in this position to later on, if one little small little thing happens to them financially, they are screwed. These people are using all of their cash flow from their job or their business, and it's going right back into monthly payments that they shouldn't have in the first place. So, do I think it's the bank's fault that people put themselves in bad situations? No, absolutely not. They're a business. I don't think that payday loans companies are, bad. Yeah, I think it's outrageous if they're charging a $300 cash advance that they're making back $800. I think that's crazy. But look, people are doing that. They shouldn't even have to have that business because what if payday loan companies didn't exist? What if credit card companies didn't exist? Well, guess what? These people would still be struggling even more because they wouldn't be able to get these credit cards to pay for things that they need and things like that. So, I want to talk about one last thing, and I know I'm extending this question here or this answer here, but I watched a video. I think his name is George something with a K. He works with Dave Ramsey, and he's one of these guys. He went on this platform with these two guys, and they questioned him. They were like, "Okay, what about the people that are using credit cards to their advantage? What about these people that never paid a penny in interest and are getting free cash back every single month on all of their business expenses? Do you still think those people are wrong for using credit to their advantage?" And his answer was, oh, well, the reason that they're getting cash back is because the bank is able to take money from the people that is paying interest. So that's why they're giving it to the good people, for their cash back. And I don't support that. And I'm like, wait a minute. So you're against a company paying people for using it correctly? But let's go back here. He's like, yeah, banks are taking money from people that don't pay their bills and that are, uneducated with finances. That's how they're able to pay the good people. And I'm like, okay, well, the whole Ramsey solutions of how the whole Dave Ramsey business got successful is from charging people that don't know how to pay their bills these courses and plans to get out of debt. So I just thought that was a
Yeah.
little hypocritical. You're like, you're blaming the credit card companies, and he's like, they're evil. They're the worst companies in the world. Never get a credit card, even if you use it to your advantage, because they're stealing from the poor. And I'm like, okay, well, y'all are doing the same. Y'all get paid from poor people,
You're providing a
So
service. Yeah, and you're
yeah.
getting paid for that service.
Yeah. So
That's
I mean, that's my answer, man. I want to stick to it is people's fault that they put themselves in that bad
mm,
position. You should be working a job. You should be saving money for a rainy day. If you go out and get a credit card and you use it more or you spend more than what you can pay off within 30 days before interest kicks in, that is absolutely your fault if something bad happens to you financially.
mm. I appreciate that. Thank you, Chris. That's a great answer.
Yeah,
Yeah.
absolutely, man. Well, Ben, man,
Yeah.
this has been a great episode, man, over the last, 55 minutes, hour here. Man, you have answered,
Yeah.
everything I needed to know, plus more. I'm definitely excited to share this with our audience here. And of course, you'll get this clip as well. What are some of the best ways that people who are listening to us, what are some of the best ways that people can contact you? And what areas do you serve? Can you help people nationwide? Is it state specific, city specific? Tell us about that.
Yeah, we're pretty much nationwide. So people can find me. I have a YouTube channel if you want to learn about real estate investing and about leveraging loan programs to buy more real estate so you can retire early. My channel is called Funding Freedom. So you can type in my name,
Yep.
Ben Stef, Funding Freedom, and then, or fundingfreedom.net. That's my website. Or they can shoot me an email. So if you go on my website or my YouTube, my email contact info is there, or they can book a call directly with me if they want to learn more about getting qualified. And then, as well as even if you're a home buyer as well, you can use that link and that contact information.
Thanks for tuning in to this episode. If you wish to be a guest on our podcast, visit SturgisCreditRepair.com and click the podcast page to schedule an episode. If you need help with your credit, you can also sign up at SturgisCreditRepair.com and start your free trial today.
Sturgis Credit Repair. Sturgis Credit Repair. If you want a new house, call us.